Welcome to Real Estate Focus. My name is Calvin Law. Our topic is residential lending. My guest is Jason Gravelle from Homebridge Financial Services. Jason has been a loan officer and branch manager for 25 years, and he is here to share updated lending guidelines and mortgage lending with us today. Welcome, and thank you for being here.
Thank you, Calvin. Yeah, thanks for having me.
Great, you look good.
I try,
Even though it rains like hell outside right now. So,
yeah.
But welcome.
Thank you. Yes.
Yeah. So let's talk about what are the new trends for residential lending right now with this crazy market. So,
I tell you, yeah, it's a feast or famine out there for home buyers right now. I feel so bad for first-time buyers, especially. As I shared with you, my own son's been looking to buy, and it's like, for doing this for so long, 25 years, it's like, I've met so many different, real estate agents and attorneys and title agent companies and, all these different ties and so forth. And in the state of this market, it's, I felt bad where it's like, usually I can, between all those people I know and connections, try to help them. And it's like, it's hard getting outbid, as you know, home buyers, they're experiencing bids 20, 30 to 100 grand over asking price. It's like, so where do you even begin? It's so, with interest rates rising and so forth, it's a dynamic and interesting market, to say the least, right now. It's very tough for home buyers.
Indeed, it is, because most buyers, when they submit an offer, present an offer, it's not just the price. They have to strategize the offer to get them closer to top one or top two tiers, if you will, in order for them to get submitted. So in order for them to get accepted. So like waiving appraisal contingencies. Nowadays, very few people are doing home inspections, and they look at, the sellers will look at the more down payment, the stronger the loan is going to be. And, there are other contingencies and term and conditions that the seller will also consider. So it's hard. It's a hard market, no doubt. And then there is lack of inventory as well.
Right. Yeah. I have Sean and Jay Rizzo over at Tiger Home Inspection. They do a great job, and they were talking about this very thing. A lot of home buyers are waiving home inspections, or they're home inspection for informational purposes only. So it's like, you can't take the inspection and counter offer on your price point or what have you. So there's definitely a slow, back to your point, meaning they're doing whatever you can to get your offer accepted by all means. I've seen buyers allow the seller to stay in the home for 30 to up to 60 days after they close for free, a rent back situation. So again, it's, the waiving inspection, allowing the seller to stay in the home, overpaying over the asking price by, again, anywhere from 20 to 100 over asking. It's that this type of market is driving that type of demand. So, that's the whole question. I get asked a lot about, where do you see this housing market going? Is this, are we approaching this bubble with a big crash at the end? And it's like, all the speculation, because let's face it, there's a lot going on in this world, between Ukraine, between fears of inflation, the Fed's raising rates, the offertory rates being raised 6 times this year. It's already been done twice. Mortgage-backed securities are getting absolutely destroyed as of the recent days. So rates are up, but this whole conversation always comes back to, is there a bubble? Is there a crash coming? And I, being in this business for 25 years, I have seen price increases several times over the last couple decades. The most The biggest one and most memorable, well, there's two big ones. The crash of '08, everyone pretty much remembers that. But if you go back before, you go back to the late 90s, here in Braintree, you had a 3-bed, 1.5-bath Cape, 190, 195-ish in price point. Back then, and I think it's fair to say from then and even back before in history, you had a one-income household. One parent stayed home, the other went to work. That was the common American system of the household. Go back to through the 90s, the 80s, 70s, 60s, and back. That's pretty much what we remember TV shows even showing, and that's how it worked. But when you have that house in 1998 at 195, and you go to 2003, and that same house is now 350,000 or more, what American household income went that high that quick? It did. So what happened is people figured it out, right? I would say 8 out of 10 customers of mine now have 2 incomes. So that back to 1998 to 2003, 4, the American household changed. It went from 1-income household to 2. So they figured it out because the demand for that house was so high, you had to figure it out. And there was the birth of daycares and a whole variety of other businesses as a byproduct of that necessity. So, the question, I come back to that to answer this question of, well, are we in a bubble? Like, where is this housing? Well, we've been through these types of surges before. No one has a crystal ball, but 2003, 2004, we knew it was coming, as we all have learned. The crash of '08 came. But even through that crash, Calvin, I don't think in '08 or '09 that same house ever went back below 350 or so. There definitely was a drop, but '09, '10, the market came right back. And again, it's to me, and I'm sorry if I'm talking too much, but I think that the genesis behind all this is population growth. The demand for housing is super, super high. So, I'll keep going, I guess, right? I did some research on this, all the data. So if millennials, if we look at generation sizes, millennials are the biggest generation that this country has ever seen. Millennials, we always think of as kids, but they're not anymore. They're 40 or 41 on the top of that generation, and they're 92 to. The interesting part too about millennials is that their generation size is growing because of immigration is alive and well, which is great to see. So they've moved up from 92 to about 93 million, if I'm not mistaken. The baby boomers were 88 million. And we know what the baby boomers did to our economy. The creation of subdivisions, the Weber Grill, all these home necessities were born from this surge of population. So let's look at this millennial size and what it's doing to our housing market. The demand at 93 million, they're the number one home buyer. The baby boomers are still number 2, believe it or not. Behind them, you have Gen X, my generation, and coming up right behind us is Gen Z, who is right about 24 or 25 in age on the top, and they're about to come in. Guess what? They're the same size as the baby boomers. Where's everyone gonna live? So that's why you're seeing all these pockets. I mean, look at Boston, all the pockets. I mean, South Boston, forget about it. That's been transforming like crazy forever. But pockets of Dorchester, Quincy. I mean, look at Quincy Center now, and Braintree's exploded. Braintree's price point has gone way up, and it's we're connected to the T to Boston. Braintree's a great town, and the price points have gone up, and all parts of the South Shore, you're starting to see all these pockets starting to fill in because of the demand. And that demand, so that's why I go back to the 90s and I say, well, this happened. We had this surge. Like, American households figured out how to afford it. That was switching to two incomes, right? So like, I brought up Southie, Southie had this great surge. Like, how did that happen? How are people affording this? They figure it out, right? So instead of renting an apartment, they're now renting bedrooms, so you don't necessarily know who your roommate is, so it's like they figured it out how to afford it. So it's like, that's where I know, that's the big crystal ball about where we are right now. Like, you have to learn from the past, but like you have to try to forecast, and that's certainly the hardest thing to do. But I don't see the demand going down.
Right, plus the scarcity of land as well.
Oh gosh.
There are no lands to build. That's why you see developers who bought little piece of land, like 5,000 or 6,000 square feet, and they try to maximize the land and then build, like, I would say, like 20, 30, 40 units on top of the land, if you will, and try to maximize the number of units for increased population.
Yeah. Towns are allowing lots that are within, I think, a half mile or something like that from a T station or a commuter rail to be built out for extra permitting to allow more units.
They build on latches
for the demand.
Look at Quincy. I mean, a lot of condos, high-rise condos, they build on ledges because there are no lands to build.
Right.
And if you have a piece of land with 10,000 square feet, that's very valuable. Where they can put a 50 units story condo for that land. So that's why it's very valuable. And I think you mentioned earlier that whether the market is gonna crash or not, it might or might not. If it will, it may be just I would call price adjustment, right? Because the currency is going down, increased populations coupled with scarcity of land. I think that the market is not going to go anywhere. I think the price is going to adjust because due to rising interest rates, and that's the trend, throughout the U.S. history. So I think it's called price adjustment,
right?
Instead of crash, if you will.
Every market will correct itself if you let it leave it alone.
Correction.
Yeah.
Yes. So with that being said, I've seen a lot of buyers out there, instead of getting a pre-approval, they're getting a commitment. So what is the difference between a pre-approval versus a commitment?
Yeah, I love all this lingo. I remember when a pre-approval was like this new shiny object. Like it was this, we took a customer from being, you run through the qualifying steps,
Qualification letter, right?
And then you get a pre-approval. Like, it was like this letter of like, it meant something, like, and it's true, it did. It was a new thing then. It was kind of from the change in technology, because I remember everything, it's done through a computer now. So it's like, the underwriting software used to be this like secret thing that when a loan is approved, it's approved by a person called an underwriter. So all these loans that we do throughout every bank throughout the country goes to the two agencies, Fannie Mae and Freddie Mac. So all us banks, all us lenders have to abide by these guidelines. And so when an underwriter underwrites the loan, they're underwriting to those guidelines. But the advancements in technology, the software access, I remember it was probably that late 90s, 2000s when we as loan officers who brought customers in to qualify got access to it. So like we could actually run loans. It was like this whole new thing, and then that was kind of like the dawn of the pre-approval. So it's like the person was taking through those engines of underwriting and was produced that approval. So that was the birth to the pre-approval letter, so that we could say that this customer, by pen and paper, like I learned, but with a calculator, that HP square calculator that you had to go backwards like 4 you go 4, 5 plus, I forget exactly. It was, you had to do it backwards and do the qualifying. So it was a step beyond that the real engine of the computer approved this loan. So then you had a pre-approval letter. So what is happening now is that pre-approval letter, now with again, advancements of our systems and processes, we are now submitting the loan to the underwriter, the human underwriter, who actually is validating. The underwriting process is more or less a data verification, data, dotting I's, crossing T's, that the data is verified, so that the income that we put into that computer software is indeed the income that the underwriter is going to use. So the underwriter is now looking at that file just like a live deal. That's where that commitment comes out of. Now the commitment's always going to be still subject to a variety of things, no matter how good it is. Like, there needs to be an appraisal on that property still. So that's a big piece to a commitment. You technically don't have a true commitment without that. And then of course, like verification of employments that are done at the end by purpose, because God forbid, someone loses their job, in those unfortunate situations. But yeah, so that's the difference. Is a pre-approval was that run through the computer, whereas a commitment now is actually verified by the human underwriter in addition.
It's just more competitive, if you will.
Yeah, it tightens it up. It makes it a more secure situation.
Do you see that could be the next level or the next revolution in terms of the commitment-wise versus pre-approval?
Well, I mentioned the appraisal piece. We are starting to get waivers. So Fannie Mae and Freddie Mac, with the advancements of technology, you go on these computer sites now, Zillow, Redfin, just about every, real estate office now has these, valuation modules that, people can put their home address in and get a value from, So I don't know the technicalities that are involved, but through those modules, we are getting approvals that have a waiver for the appraisal because they have accepted the value based on that track data of other homes sold in the area, that they're comfortable with it. So, automation's getting more and more and more. So as long as the integrity of the data being put in that spits out that approval is intact, then things can happen fast and good. I mean, I don't want to get off topic, but our company's merging in with a financial institution called Figure, where we're going to start lending on blockchain technology, which is a whole another paradigm shift in lending. So
yeah, we
won't get into that.
The waiving of the appraisal, the whole show, But
yeah.
So the last question is that because of time constraint, we talk a little bit about the changes of condos, right? When you buy condos. It used to be where a little bit simpler in terms of special assessment, who pay off and what and stuff like that. So can you just touch on that?
Yeah, condos are one of the, in lending, one of those things that seems to always be updated more often than others, because a condominium has different, you have a single family home that sits on its own land, it's its own building. A condominium has attached in common areas. So when we approve a loan on a condominium, we're not just approving the person, but we also have to approve that building, that project, that's approvable to meet the standards that Fannie Mae and Freddie Mac have. And they're the ones who are it's always changing, and you have to keep always an eye on it. Right now, with some of the issues from Florida with that collapsed building, and I think it was Miami or wherever that was,
I think it was Miami.
And there's some other issues with, Fannie and Freddie, that, they're like, wait a minute, we don't want to finance a property that, that doesn't have the proper funds allotted, that may have issues for the future with their foundation, or, what happens when the next storm comes, like, are they prepared? So we lenders now have to make sure that a lot of projects, here in New England, the ocean effect, shingles and roofs and sills always have to be maintained. So The key for condos is if you're planning to sell or you're looking to buy one, you need to make sure that the condo project is well managed. And when I say that, like you want to have reserves built into the home association's budget, and furthermore, that any current or future special assessments, again, around here, mostly the weather effect, as long as they are maintenance oriented or related, that's going to be fine. If there's a special assessment that's current or about to happen that has to do with repairs of an issue of hazard or any concern, that could become a problem. So that needs to be addressed, out of the gate before you sell or before you buy that. You need to find out this information. It's very important. Yeah.
That's why the due diligence is very important after the offer get accepted. So so that's the best way to protect the buyers. Yeah. So well, Jason, well, thank you so much for sharing your insight. I wish we have more time. I'd love to have you back and continue to answer the questions that we talk about. So thank you.
Thanks for having me.
Thank you. Well, I hope the information that you found so far is helpful. And hope to see you next time. Thank you so much for watching.